try and follow this through for the next kind of probably a month or so with FX Street. As I say, I've done this webinar for so long on FX Street that it's kind of, I think most of the things that I've said for granted, I'd say most of the things that I've done for granted. I forget that people at different stages in the trading career and have done different things and looking for different things. And, I'm kind of at the end point of my trading career where I know what works because that's what makes me money. I know what doesn't work because I've stopped doing it a long time ago. But, a lot of people are still searching for that holy grail, still searching for that idea that there's something out there that they just read or dip into that's going to change, how they make money. I mean, it doesn't exist. I mean, it really doesn't. And I wish someone had brought a book like I did, 10 years ago, and I could have had a midpoint kind of change in the way I sell the markets because, it's a constantly changing thing. It's not purely about the technicals, not purely about the fundamentals, it's not purely about what you do understand, or I guess importantly what you don't understand. I mean, there's things I don't understand, and I've been doing this for 20 years, and I don't understand Donald Trump, but then I do. I don't understand the Fed and their position, but then I do. You choose to believe in things that you think are norm, believe in things that you should understand, and then choose to discount things that you don't believe because they can't be real. Because if they're real, that changes the kind of fabric of what you understand as an economist, as a human being, as just anything. So that's where we're at right now. I think that the main thing is, what I'm trying to kind of relate to people is just forget what you know, because you don't know anything. I don't know anything. Nobody knows anything. There's a certain group of people that do know a lot of things, and they're, maybe Trump's in a circle, if you believe in, kind of conspiracy theories. But I mean, why else would Donald Trump be president? I mean, he's been pretty terrible. Terrible as a father, as a human being, as a president, as just anything. It's anything to do with kind of real life goes. He's been the absolute parody, of what he was as a reality star. But he's done that in huge form as the leader of the free world. So the rough guide to trading, I guess the first thing that was quite interesting is that I found it quite difficult to start the book, and I'm not really used to being told what to do or being told no, because why would I? I'm a successful trader. I do what I want. I was asked to write the book. I didn't want to. Why would I write a book? I mean, why would I give my secrets away to the rest of the world? And I kind of started the book, and I started from the kind of from a backwards perspective. What do people generally ask me? Then I tell them, this is this is that, because everyone, when they kind of come to me, you can have free mentoring me. I always have to take a call, but people want to know what I know. Like they think that will translate exactly into what they don't know. That's not it's not the kind of case at all. I mean, the whole thing is, it's all about being right at the right time, what you know, what you don't know. So I started that way, and it's like, what do you think you know? That's like a good way to start a book, isn't it? It's like, what do you think you know? What do you think trading is? What do you think you've got? What do you think you're going to do? And, it's not the same for everybody. A lot of people think, I want to be a trader. I want to be rich. I'm going to buy, a green Lamborghini. It's like, you've done all that. Been there, done there, got the T-shirt. It's like, then what? People don't have any kind of long-term trading in planning trading. And that's what we're seeing in the stock market right now. Nobody's got any idea what really to do in the stock market. You just keep buying the stocks because they keep going up, and people don't really understand that it's the same people, buying their own stock, backed stocks by the government and the Fed to keep markets going up. So it is a one-way street, and that will continue for as long as it continues, and then it will change. The markets will go down. But this is the whole thing. It's like when you're living in a world where there is no reality, there is no kind of consequence, everything's too big to fail, then it is a one-way street. So my idea about trading has nothing to do with being right. I'm sick and tired of people saying, oh, Steve, where do you think the Eurodollar is going to go? Or where's the cable going to go? Where's, the S&P going to go? It's going to go where it's going to go. It's going to go up. It's going to go down. It's going to be at one point an extreme in time. It's going to be at another. The whole point doesn't really make any difference whatsoever where a market goes, as long as you can kind of control your entry size and your risk and where you want to be in and where you want to be out. That's what trading is all about. You can be right or wrong 20 times in the same point of a move that's going up or down and make more money than just being sat there, while the market's doing what it does, ebbing and flowing, going up and down. And you can say it's the RSI, the Bollinger Band. You can say it's an Ichimoku cloud. It's a certain type of candle. Whatever. I mean, all these things you see that you think you know, you don't know. Everything you know, it's just manipulated. It's on the screen that I'm showing you right now. These are my charts. But I tried to, cut through the nonsense and cut through the kind of, manipulation and the nonsense that, the kind of like the big guys, the central banks, hedge funds, kind of spit out. Because if you're trying to go off, fundamentals, what do you know? You don't know anything. I don't know anything. It's like Donald Trump could say the world is flat tomorrow, and a certain amount of people will believe it. Would that have an effect on the stock market? Probably not. But certain, things that he said has an effect on the stock markets and the currency. But I guess the other thing is, it's like, why try and guess what people that have, not just millions, not just billions, but trillions, amounts of money are going to do against you? Why is Elon Musk, overtaken Warren Buffett? It's the 7th richest person in the world, or 6th, whatever the places are. You tell me. Do you drive a Tesla? No, I don't drive a Tesla. I could drive any car I want. I have plenty of cars. None of them are Teslas. But, the thing is, it's like this idea that one person has the idea and the knowledge of the future. Nobody knows what the future is going to hold. And the future used to be in the olden days. I'm talking about the olden days, as in like 1995, the year 2000. Do you remember that? The plane's going to fall out of the sky and computers will cease to exist anymore. We didn't have this idea that people, individuals, could manipulate markets this much. At the end of the day, I can predict 15 minutes into the future. That's what I do. Any more than that, I'm just guessing. I don't know. It's this idea that, we can predict stocks like Tesla and Facebook and, whatever else is punted by Silicon Valley that we're going to go, into the future at this point. But look at oil. Oil was inelastic. That was an absolute staple of the entire way the universe that we know it existed. And oil went to minus. So what do we know? Things can change in an absolute instant. So why are we all trying to find this holy grail, this idea where a market's going to go? A market can go up and go down. It doesn't really matter. The whole point of the rough guide to trading and the way I trade is like, forget it. A market like this, the dollar, it can go up to this point. Look at it. Just miss this red line that comes down. That's money. Yeah? Other things, the pound, undervalued. The EU have caved again, on this kind of, bailout for the European Union. Who cares? Of course someone will bail. So what are they going to do with Brexit? Yeah, they're going to cut their own nose off despite the face. They're going to make Brexit a hard Brexit to hurt themselves. No. So the pound, when it's low, its value, it goes up. So you don't necessarily have to buy it here and sell it here. You can buy it on the way up and cash your profits in. Because why should you let the markets dictate when you right or wrong? Why should you watch your P&L go up and go down and be, a slave to the markets moving and to the big players, the hedge funds, the speculators? Why should you let them tell you where your stop should be and when you're right or wrong? Right is when your P&L's green. Wrong is when it's red. It's just how much is red that you have to kind of take on board of how much is enough. It's a million times we've gone through these things. And, as I say, my charts are quite unique in a way because they are trying to just take into effect, what I've learned. And, again, I'm not just a trader, but a hedge fund manager, I've been a risk manager. I've managed the biggest trading floor in Europe. I'm taking all the psyche and all the understanding of everybody who knows what it's like to make money and putting it into a retail perspective. And, again, when you look at it, it's absolutely perfect. I mean, these are different time frames in gold, for instance. I mean, gold. Okay, so we've got every explanation of why things are moving the way they're doing. If you look at the markets, it's like, stocks going up because they're supported by the Fed. Stocks going up because 1% are buying, all the stocks. Then why is gold going up? Okay? I mean, you must read things, like Dow theory and, kind of all the things that explain how markets move, how they're correlated, safe havens. If stocks go up, a risky investment, gold has to come down. So why is gold not going down? Because it's just another manufactured way to make money out of nothing. There's so many people at the top that have money. They can make anything move in the way they want. And it isn't your mom and pop investor. It's not your average retail investor. They're out at 1,500. So who's buying gold? If the Nasdaq's making record highs, why is gold here? It makes no sense. You have to stop thinking about things that make sense, or what you perceive to make sense, or what's real and what's not. Gold's going up because there are more people that have money than don't have money. They have nothing else to put their money in apart from stocks. When they've run out of money putting their money in stocks and property, they put it in gold. So everything's in a weird we're all fine, kind of everything will be great world. But the technicals still work. When we hit these lines, I mean, this is a great example. We're looking at, the hourly, the 15-minute and the 5-minute. We've all peaked on the Fibonacci expansions. And all these lines are drawn by, my algorithm. They're not put in for fun. It's just not saying this, this is the absolute top in gold. Far from it. It's just saying that we're overbought. We're overbought. So when the market's coming down, people are taking, their profit from their longs. So again, buy it when it hits these points. Buy it here, buy it here, buy it here, 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 here. You don't always have to go against the trend of the market. You don't always have to go against what the market's telling you. Go with it, but don't buy it high. If you're buying it here, yes, it might go up to here or here, but probably your chance of staying long is going to be, superseded by its ability to go down before it goes back up. So all these things, like RSI, D-marker, candlestick patterns, Bollinger Bands, all the things you look at, they're all designed to really kind of fake you out of the market. They're designed to show you what everyone's thinking. Then you believe that you understand what the market's doing because it's what it wants. But the chances are it's what it wants, and it doesn't work another 5, 6, 7, 8, 9, 10 times. So all these points it's like a warning indicator. Be wary. Be wary when you go long at the red points because it will go up and squeeze you out. So this is the kind of thing you've got to keep looking for. It's second guessing all the indicators. And remember, all the indicators, you look at like RSI, as I said, the kind of D-marker and all that kind of stuff, Bollinger Bands, moving averages, moving average crosses, they're all lagging. So they have very little instant kind of impact into the markets of where you should buy and sell. They're not really where you should be looking. You should be looking at whatever it says 1, 2, 3, maybe days later, which is incredibly difficult when you're a short-term trader because who wants to wait 3 days for a signal? You see a signal, you want to get in, then you get manipulated by the markets, it goes up. When you think it should go down, you get stopped out and the market does exactly what you think 1, 2, 3 days later. So I guess it's incredible. I mean, again, it's just looking at the charts. It's just kind of everything's high. It's kind of the dollar's high, the euro's high. The S&P's high, the pound's high. Everything's high. It's what is not working. Everything's not working. There's absolutely no point trying to look at any natural correlation. There's no point trying to look at kind of every coefficient between the FX pairs. Because none of it makes any sense anymore. And it doesn't make any sense anymore because all the things that I learned, I mean, I'm talking, 20 years ago about, standard economic stuff, kind of things that, things are a safe haven, things are, kind of protected against inflation, things are a store of wealth, things are, risky investments, currencies are, based upon GDP and whatever. I mean, they're not. Nothing's based on anything anymore, are they? Basically, everything, whatever a central bank and what a government is willing to do. And we've seen with Donald Trump, he's willing to do anything. But anything at what cost? I mean, what does it really matter? If you can't protect your own people from dying, what can you really protect? There's no point having the biggest army on earth and protecting yourself against all the evil foes out there if you're letting your own people die because they won't wear a mask or you won't close cities down or you won't try and contain a virus. So these kind of things are incredibly kind of complex, but they're being displayed in the markets right now, and it's just a simple idea. It's just a simple matter of where you buy, where you sell, what you think. I guess, as I said, it's kind of coming down to this idea, is it fundamentals, is it technicals, and pretty much, I kind of, figured it out, I don't know, I guess earlier. It was 80-20, that 80% of the time markets are moving in a technical manner, 20% of the time fundamental, but the fundamentals don't seem to have any relevance whatsoever. You've got China talking about, doing a new, kind of figure around GDP, because it can't really even, make up GDP anymore. So, if China, the second biggest economy in the world, can't make up a figure the world can believe, then what use is anything? What use is non-farm payroll? What use is CPI? What use is anything in the world? So then you go back to technicals. What do technicals tell you? Well, technicals tell you what is going to happen based upon the past. Then you use the past to predict the future. But what if the future is something that is so insane that the technicals don't even matter anymore? I mean, it must be like some people in the room that are thinking about these kind of things and have traded. I mean, what kind of products do you want to go through? What kind of products do you guys want to kind of talk about? I mean, I think the whole point of this particular kind of introduction kind of, session to the way I wrote my book is that, back then, the world was quite sane. It was quite simple. We had relatively, kind of sensible people-ish control the world, and it was all about just trying to make everybody have a slice of the pie, and everything was kind of okay as long as everything was ticking along. But Donald Trump came along, and suddenly the pie wasn't big enough. Donald wanted to make the pie bigger for America, but he didn't realize that making the pie bigger for America and harming China meant that the whole pie was smaller for everybody else. And this again is the whole kind of MAGA, making America great again. I'm not quite sure what period of time Donald Trump was referring to. When was America better? When was it better for him? When was it better for the rest of the United States? What period in time we're actually talking about? What makes a country better? What makes it kind of better in the eyes of the people that vote, better in the eyes of the people, kind of pay taxes? What would you need to see to know that America is doing better? So this kind of thing, sometimes I can't always see how many people in the room, and the people that are kind of listening, people that got questions or things they want to ask, or kind of things that are coming through. I mean, this kind of great thing about the charts, it's kind of the charts don't need any kind of answers, they don't need any questions. It's kind of only look at the S&P. You see, I've already predicted where it's going to go. It's going to go here. Where's it going to go after that? It's going to go up here. So how do I know that? Well, I know things like Fibonacci. A whole portion of my book was all about what happens in the past will help you predict the future. So, the Fibonacci is based upon previous highs, previous lows, and, movement that's been supported by significant points of support and not been broken by a significant point of resistance. So, we see things like this gap. So the gap, yep, it was closed, but significant support. Then what do we have? Resistance. So it's broken, doesn't even test it. Doesn't test it, it goes up. So I won't be surprised if the S&P doesn't stop until, I don't know, 3,400. Above that, well, that's anyone's guess. And who knows? I mean, Donald Trump can send it as high as he wants. I'm sure, him and his close pals, are playing along, and he's got the backstop of the Fed. Well, the Fed, apparently don't run out of money, so they can do whatever they want with, the trillions of stimulus they're putting in, paid by the taxpayer. And again, that's all great. I don't mind that. It's not me to say. I don't live in America. I didn't vote for him. I didn't, I didn't vote to live in that country, and I don't mind either way what happens. But if that's what is going to happen, then why fight against it? Why try and fight against the inevitable? Whatever happens in America happens in, the UK. Look at this. A great example. FTSE was down here just, literally 15 minutes ago. Opens back up. It's going higher. Why? Because if you buy stocks, you buy the NASDAQ, you buy the DAX, the absolute basket that you have to buy the basket case of the UK. The UK has to be bought up as well because it's all completely, intrinsically linked. But you think about that. It wasn't more than probably 18 months ago that, the pound was falling and people were putting money into the stock market to buy it because the pound was cheap. So cheap pound means you can buy cheaper stocks. But pound's high, FTSE's high, S&P's high, DAX is high, Nasdaq high, gold's high. All these things, as far as I am concerned, as far as I understood from, the kind of, many years I've studied the markets, is that can't make sense. That doesn't make sense. That those all can't align. It's impossible for all these things to go in the same direction, because that's not how markets work. That's not how, the kind of coefficients of markets, are allowed to work. But as I said, when you start, creating and printing trillions of dollars, pounds, euros, creating this ideal that no business can fail, and the state has infinite power and wisdom, then we just carry on. Nobody seems to get hurt, do they? Nobody seems to get hurt by the stock markets going up. But you have to remember, for every person that's long the stock market, somebody's short. So short sellers will get hurt. I know everyone demonizes these short sellers, but they're a natural part of any market. They're a natural part of anything that that goes up and down. There has to be people on the other side of it. And the thing is, you hear this kind of like statements out of like companies like Robinhood. They've had like 1,000% interest in an account. And like millennials, we love to demonize them, don't we? And the snowflakes, love to demonize them. So they stuck a few $1,000s in an account. What do you think is going to happen when the markets turn? They will lose all their money. And they don't have much money because they haven't been around long enough. They didn't buy a house like all the boomer monkeys, that bought a house 20 years ago, and sat on this imaginary money. So what I can understand from what you are saying is market movements are random. We can test our price movement and predict a certain amount of probabilities for a particular sentiment in the future. Well, what I'm saying is, why are you looking at the past? That's the first thing I'd say. What's the past to you? Why are you looking in the past? What's the past giving you, to allow you to predict the future? I mean, at the end of the day, when's the last time you saw, this much, COVID or quantitative easing or people like President Trump or, banks too big to fail? The last time we saw it was 2008, and that was a tiny, tiny proportion. And that brought nothing but inequality to the world. That brought, people not being able to afford asset prices, wage stagnation, and the world just kind of flatlined. And then what we've got is this whole pandemic, situation, and it's stagnated everything. Completely everything has gone, let's face it, to shit. It's everything's, stood still waiting for the answer. And apparently the answer is, some experimental vaccine. We didn't cure AIDS. We can't cure the common cold. So we're all sat around and thinking we cure COVID with some clever people in some laboratories somewhere else, and the world gets back to normal. Right. I mean, the first thing I'm going to tell you is, from 20 years of doing this stuff, and I run my own, kind of algorithms, that kind of stuff, is that you'll never make any money by back testing, ever. Back testing is a complete waste of time. Do future testing. Do real testing on small amounts of money. You will never, ever make any money, ever, back testing. So that's my answer to that. It's as pure and simple as that. I don't know who you are. You might be, Bill Gates. You might be anything. But you're not, because you're on FX Street webinars. So you will never make any money back testing. So whatever you've done, you've wasted your entire life and your money back testing. That's as simple as that. Any other questions or thoughts? Again, what's the past? What is the past? It's just the past. It's something that happened. But, the past is something, that it's like, think about, your past relationships. Think about, your past career in jobs, or, what if you're a footballer or whatever. It's not like for like. There's absolutely no way you can take what's happened in the past, and especially over the last 18 months, and use that as a prediction to the future. Because you've got things that never existed. You've got things that never would exist again. Let's hopefully they won't never exist. Let's hope there's not another Trump. Let's hope there's another coronavirus. Let's hope there's another round of, infinity, QE, to the end of time. Let's hope that's not going to happen. At the end of the day, all you can go off, you kind of go off is what's happening right now. This second, this minute, this hour, probably past this hour. That's all you can do. If you go past an hour, you're just wasting time. You're looking at things that everybody knows. Everybody knows. Like Dow theory, is something I've studied for years and years as an economist, right? And that knows that everybody knows every piece of information at that exact moment in time, right? And what relevance does that have? Now, Donald Trump can get on Twitter and say, fuck this. Well, I don't want to do that. I don't want to do this. I don't want to put masks on people. I don't want, the countries to lock down. I don't want this. Dow theory doesn't exist because there's no place for Dow theory to exist anymore. This idea that we all know information at the exact same time is irrelevant. And all the information we do know is irrelevant because nobody's come into this extent and said they'll stop every bank failing, they'll stop every currency failing, they'll stop every aspect of life failing until they can't. Remember that we're run by people. They're just individual people. They're somebody's dad, somebody's girlfriend, somebody's husband, somebody's wife. Nobody knows everything. Why do we still think the world, is run by people that know everything? They don't. They know very little. And these things are so complex and so fast-moving that when it all goes wrong, they have one answer. Print money. Get out of jail. Don't let it fail. Nothing can fail. If nothing fails, we've succeeded. I mean, I don't know. I mean, what have you achieved by demo trading? You tell me. I've never, ever in my 20 years of trading traded anything but live money. Okay? So if I'm trading an algorithm that I want to run £1 million, right, I'll have it run on a £10,000 account on £1 a point because that's real money. So what do you get from demo? What could you ever sell on demo? You can't come to me and go like, all right, Steve, we're running this thing for 18 months on demo. Give me £1 million. I'd say, well, we're running on demo and it's up X% on a million pretend money. Then why don't you just put a tiny bit of money in? Why don't you do anything? Anything. What does demo prove? This is it. Morgan's, he said it exactly right there. Money changes everything. You have to have that emotional connection. And this is what kind of tires me. And that's why I stopped doing webinars for quite a while because, people are quite critical of me in some ways because I said that poor people, not poor people, but people that put small amounts of money into trading. And I think I'm still right. Because this idea you can put money you can afford to lose into an account, you will always lose that money. Put money you don't want. Plenty of people can put £100 into an account and do that 10 times, right? I didn't want to lose £1,000 in the first place, right? But then think about that at a proper scale. If you want to really make money in the market, I would say realistically, you're going to put 10 grand in. And that's still fuck all. It's nothing. It's not a small amount of money. 10 grand is nothing in the markets. 4 trillion is traded every day on the FX markets at a minimum. Okay? So 10 grand is absolutely nothing. But nobody wants to lose 10 grand. But then nobody puts 10 grand in. I want to put a grand in. I want to test it. I want to back test it. I want to see if it works. The proof in the pudding is it works there and then. It doesn't work in the back testing. Or maybe it does work in the back testing. But maybe that's a false negative. Maybe that's, just kind of lulling into false insecurity. Everything you should do when it comes to trading should be right here, right now. You're doing £1, £2, if you're comfortable, £5. If you're very comfortable, £100. The markets are here right now, giving opportunities every second of the day. You keep waiting for confirmation. You keep waiting for somebody else to tell you you're right or wrong. They will take your money. You have to do what's right here and then. And what's right, this is the killer that people don't want to admit to themselves. It's not a system. It's not Bollinger Bands. It's not a moving magic cross. It's not a HMQ, cloud. It's not a high kinetic candle. It's not any of that. It's you. It's you. You, individual person, as, a trader, understanding what makes the markets make you tick. Why does it make you feel fear? Why does it make you feel you think you're wrong when you're right? What makes you tick? Makes you press that button, then you're wrong and you get out, or you're right and you make some money. This is the thing that people don't want to admit. It's that kind of, holy grail moment. It's that kind of, that epiphany, it's that getting over the imposter syndrome. I sit here and I click the button and sometimes I know I'm wrong, but I know I've got enough money to take on the markets to a certain extent and make that money back. Doesn't mean I make big money. It just means I don't get bullied by the markets. It means I can get out for a loss, or a scratch, or I can make a little bit of money. Whereas most people are just sat there, putting an order in the market, going long or short, putting a stop in, and hoping the market extends 500 ticks over the next 2 days. It's not, the markets don't work like that. The markets are spitting out pips every day. The problem is that most traders are not trading size appropriate. You need to be trading size appropriate that every tick matters. If a move comes out of nowhere and you're on the right side of it, make 10, 20, 30 pips, you're doing it a £1. Who needs 30 quid? Nobody. Nobody needs 30 quid. What can you buy with 30 quid? But if you're trading 20, 30, 40, £100 a point, yeah, you're £3,000 on side. Nobody's going to turn down £3,000 a point. The whole point of the rough guide to trading is, once you get it, scrap it all. Just forget it. All it is understanding how you interact with the markets, how you can be positive and control your own emotions in the markets, and scaling up that size and making every pip count. So when you're inside, you're not thinking, is that enough? You're already out. Because you're trading enough size that goes, yeah, bang, 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 £2,000, that's good money, I'm out. And the thing is, people think £2,000's a lot of money. It's not. It's nothing. I don't put a trade on unless I'm trading 2, 3, 4, 5, £1,000 a point. But it took me 20 years to get to that. But then I can't do anything else. Because why would I try and make £200 out of a trade? Why would I waste my time? I just wouldn't bother. It's either a good trade and I want my money in and out, or it's not. And remember, I predict markets like everybody else, and I'm generally right. But I'm out way before it gets to the peak. Way before. Because I get in, I get out. If it's still good, I get in, I get out. I don't leave my money on the table. I'm in, I'm out, I bank it. And that's what you need to do. Every guy sat there around the golf club saying that, yeah, I made 300 points in the FTSE yesterday. They're always on a quid a point. I made 15 points in the FTSE yesterday on £1,000 a point. That's what I do. Yeah, and yes, if I was brave enough or smart enough or whatever my body needed to be, my mind needed to be, I could have held it and I'd be Warren Buffett. But I had understood and figured out, 20 years ago, I wasn't that person. I was just happy with what I could make out of the markets, and I take it and I stop trading. For me, time's the most important thing in my life. So if I can nick 2, 3, 4, 5, 10 grand a day, I take it. Could I have made 100 grand? Probably. I've never been that brave. I've never been that person. I know and respect what I can do. And I take my money at the markets and then leave the money to everybody else. But see, if you can do that and you can scale it up and you can understand where you could be, maybe you can make £500 a day. Because I tell you what, it's much more satisfying than going to sleep at night, checking your phone every hour and going, am I onside? Am I offside? Oh, I've made 100 quid. Oh, I'm down 100 quid. Oh, I'm up 100 quid. Oh, I'm down 300 quid. Oh, what's the point in that? Take the money when it's there for you. Good question. Should trading be as mechanical and boring as much as possible to avoid emotional mental errors? Yes, absolutely, 100%. You should hate trading. By the time of trading, you should hate it. You should look at the screens and want to smash it up. You should hate it because, it's there to cloud you. It's there to kind of make you feel like you don't belong. It's the imposter syndrome all over. You should go into the markets and just go, right, what am I seeing? What do I understand? What do I want? What do I want to achieve? Then you achieve it and you're out. The more times you're in the market, the more risk you have. The less time in the market, the less exposure you have, the less, chance you have of being wrong. Time is your enemy. Time is your enemy in trading. And that's what every trader seems to kind of fail to grasp. That the smaller amount of size you're in, the longer of time you have to be in the markets to realize the gains that you want. The bigger amount of, size you put into the markets, the smaller amount of time you have to be involved, the quicker you can take your profit. But that requires a different way of thinking. Yeah, because everyone can go off, side, 15, 20 points on a pound, because no one's going to miss 20 quid. If you're at £500 a point, nobody wants to go offside, 10, 15 grand before, they're on 10, 15 grand. So there's somewhere in that middle ground that everyone can find. And when you're intraday trading, it's not trying to kind of be right. He's trying to be right at the right time. Pick those points. Pick those points of those quick 5-minute bars. You know, those candles, so those 15-minute candles, those points where the market overextends, and get out before it retraces. So how many times you've been watching an onside position and you're thinking, oh, it's going to go. It's going to go. I've done it. And like all of a sudden, your £500, £300 profit is gone there to zero. Then you pay in your spread. Then you're down to £100, you know, minus £100, minus £200. And that money that you saw is gone. And then all of a sudden you're £200-300 back on side and you think, whoa, should I take it now? We could have took it the first time, then go back into position. It's thinking not like a machine, but it's thinking as the markets are. Every time the markets are moving, somebody's making money. A machine, a black box, a grey box is making money. You've got to be in, you've got to be out, you've got to be banking that money, continuously rinsing your money through the markets. Because if you're not, you're just absolutely just at the mercy of somebody else. I think a mental stop loss is always the way to go, because when you're thinking about, you know, when you're trading on any spread betting platform or you know, kind of any market, there's somebody else behind it. So if you've got a stop loss, you know, in the market, it's the win with somebody else. You know, you can see it go 1 pip or sometimes 1 pip before your stop loss, and you still stopped out. So remember, there's people as traders behind you. So for me, a mental stop loss means you're in control. If you've got physical stop losses in, you control the market. And again, it's hard. It's difficult for people to get their head around. But if you're watching the screens and you're in the trade, I don't believe there's any place when you're watching the markets, you know, as you're in the trade, to have, you know, stop losses. Why let the market tell you you're wrong? You should have the mental discipline to make you, you know, get out of a trade. How do you predict the best time to enter an exit trade? Well, I mean, there are busy times in the markets. I look for speed of movement. I look for busy times, because I know if someone's right, someone's wrong. If someone's wrong, someone's right. That's how markets work. So I'm not sat there looking for tiny candles and you're like kind of waking up in the morning going, wow, that market went 300 pips on whatever piece of nonsense news or whatever, you know, made up, you know, kind of technical analysis was broken. I'm in the markets when they're busy. I'm like I am an old-fashioned, you know, prop trader. I look for movement. I look for things happening, and then, you know, to trade within that movement. Why wouldn't you? That, you know, the most obvious way of, you know, predicting a market's going to move is by actually moving. You know, if you're waiting for it to move, then you're positioning yourself as some sort of, you know, longer-term trader. You're predicting the move to happen. Then you have to wait. Why wait? Wait for the market to move. Then you don't have to wait. It's either going to go up in the direction, down in the direction. It's either going to retrace or it's not. Either way, you know something's going to happen fairly quickly. You know, if you want to be less time exposed, then do it when the candles are the biggest. Don't do it, you know, waiting for a market to break out, because that's, you know, again, that's somebody else's game. I would say the big thing is, you know, for me, I really don't kind of, you know, promote myself. I haven't really kind of ever in 10 years promote myself, but I started working, you know, with certain brokers, and you know, my book, you know, look at it, 36% off, you know, 9 quid off. It's $15.99. It's like anybody that will buy that book right now, I'll give you 1 hour of my time. I'll give you 1 hour of my time after you've read it, and I'll go through anything and everything you need to know about trading. I mean, how thorough can I make that? You know, the biggest thing, you know, that I've done in trading, I guess, you know, for the things I've done and, you know, the money I've made, is I will give anybody my time for free if you're serious. Now, if you're serious and you really want to do it, I will talk to you. And if I don't believe you can make it, I'll tell you. I turn away more people for my mentoring than I take, because I'm not bothered. I don't charge for it because I'm not bothered. I do free webinars like this because I'm not bothered. You know, I've done 10 years of FX Street. You know, I've done webinars on, you know, Intertrader was a chief market strategist for 10 years. And, you know, I did it because, not because I'm altruistic and I want to give something back. I did it because it makes me kind of reconnect with people, reconnect with the markets, and makes me think what I think is either right or wrong, or I need to adjust my thinking. These things are changing. There are no constants in trading. So one thing might work, it stops working. Then you readjust. This is the point you have to be as a trader. You have to be constantly reassessing and changing the way you view the markets, the way you view yourself, and thinking nothing ever stays the same. But traders always want that constant. They want to go back to, how do you make your money, Steve? right? What do you look at, Steve? Well, I'm looking at these things on the screen right in front of you. This is what I look at. Fibonacci. That's it. That's all I look at. And that works for me. It might work for you in a different way. But if I can get you into a way of understanding what I look at least you're looking at something constant. Because if you're looking at anything else, if I'm being honest, you're probably not looking at things, that you can actually repeat. And it's all about getting the confidence, compounding what you know, compounding the size, and then trading and being out of the markets before they turn around and tell you you're wrong. If you're going to trade for any longer than 15 minutes right now, you're doing trading wrong. You're investing. You're short-term investing. All about being in for 5, 10, 15 minutes, 10, 20, 30 pips, and you're out. Anything more than that, you won't be able to repeat it. You're setting yourself up for for failure because you're against too big an enemy right now. The enemy out there is just too big. It's got too big of funds. It's got too much momentum on its side, and that's just the way it is. I'm sorry, it's just the way it is. Anyone who's sold the markets in the last 18 months, scrap that. Anyone who's sold the markets, as in the stock markets, the last 10 years, I don't know anybody who's cleaned up. And I know everybody, right? I myself been carted out numerous times. I've traded DAX for 20 years. I think I know it. I scalp. I make money. Compound it. I take one big short and I get fucked. And that's happened 2 or 3 times. When I say, I lose big. But it's all that work, all that money, all that kind of, cold, hard, kind of chip away. Don't be too greedy and you think, this is it. This is when it turns. Because there's someone out there that's got more money than me. And I trade £1 million account. So you have to say, the people that are bigger than me, of course, they're infinite. Of course they're bigger. But what I'm trying to tell you, what I'm trying to kind of really drill home is, for this kind of whole webinar, is that don't try and ask for more than the markets are willing to give. Be size appropriate, get your money in, and get it out as quick as you can, because that is the way to make money. Compound it. Don't take any big views. Views are for, the 1%, the people that can ride it out. Yeah, follow me on Twitter, Steve Ruffley. Basically anything. Just Google Steve Ruffley. I've got, 10 pages on Google. Hi, Steve. Do you think your choice of broker is important? They're all pretty much the same. No, not at all. I think that the brokers are not the same at all. I think anyone that trades in the UK is at a disadvantage, obviously because of, ESMA and, the regulation changes at Europe. I would think that anyone that trades with any of the major brokers is a real disadvantage. So I don't know what broker you're at, but if you're at IG, for instance, you're at a massive disadvantage. I'd say that the worst broker probably in the world. I couldn't recommend a good UK broker, I'm afraid. I would say definitely go offshore. I would say Black Bull Markets is who I represent here in New Zealand. I have all my money there, which is 7 figures. So yeah, you get your leverage. You get the protection of a very safe place. That's got no COVID, so no one's dying here. We're all good. Well, we have got 28 cases in managed isolation. So a little tip about predicting the future. Why did Steve Ruffley move to New Zealand 3 years ago? Well, there we go. I kind of, my job, my business is to predict the future. So that's why I came to New Zealand. I knew it was going to be one of the safest places in the world. But yes, I would say anybody who wants to get in touch with me after this webinar, just Google Steve Ruffley, buy my book on Amazon, The Rough Guide to Trading, or just have a chat with me. Just, find me on Twitter or just, email me, steve@steveruffley.com. Let's have a chat and I'll be able to help you out. I mean, at the end of the day, I'll give anybody a call. I'll give anybody a little bit of my time if you're serious about trading. And I think I'm probably the most genuine person in trading, to be honest, because who else will give you the time for free? And as I said, 10 years. 10 years, a premium presenter on FX Street. You tell me who else is doing that for free. Not many people. All right, guys. Well, I think that's pretty much all I can bring to the table right now. Anything you want to hear in private, just give me a shout and I will I'll get back to you. All right, guys. Take it easy.